Just want to show you what I did with AI to help making trading easier. I'm not going to be teaching you how to trade. I'm just showing you how I try to make it a little easier. Now, this is a typical chart. Let me close this. All right. And you're supposed to you're supposed to know if when it reaches up here, it's going to come back down or come back down even more. It's easy to see in hindsight because it already happened, but when you're in the middle of a trade, let me show you. Like if I'm here and I'm up here, how do I know it's going to come all the way down? I mean, why? So for one thing, I'm not trying to teach you. I'm just making a point. I know from here I can tell it's going to come down to here because there's a gap right here, and we call that a fair value gap. So price tends to come to refill that gap, right? So I can tell that it's gonna eventually come down to do that, right? So it did that. Now, it doesn't mean every time it's gonna come exactly. It might do halfway and go back up. It depends. But usually it'll come all the way down, and there are other
It's 9 o'clock.
there are other confluences to look at to tell if it's going to come all the way down or not, right? So looking at this right now, it looks like it just looks like gambling. Like how am I supposed to know, right? So what I did, before what I did, what is usually done, we use something called indicators to give us an idea. So this way it came all the way. There's another gap right here. See, there's a gap between this one and this one, and there's a big gap here. So there's a candle here, and there's a big gap here. That's just one way. It doesn't mean you have to use that all the time. There are many things to look at when you trade. Many, many things. All right. So one of the things we look at is what's the high? It came up to this point here, and that's the highest point it went to. So, but why did it go there? Why did it reverse from there? So we use indicators to tell us that, and I'm going to show you what I use. Actually, I built these myself. These are my indicators. I call it VRAM. It's an acronym. So now this red line is drawn before the price gets to here. This box is drawn before the price gets to here, so I know where it's likely to go. All right, let me show you. Let's go back to here. Oops. Scroll over here. All right, so price was going up, going up. This red line is already here. Okay. All of these lines, we call them support and resistance. So if it's below the price, it's called support. If it's above the price, I'm talking about these lines, this big red box right here, and this 1 minute, 5 minute, 15 minute, 1 minute SR, support and resistance. If it's above the price, it's resistance because price wants to go up, but it will hit that wall and go back down. Literally always, almost without fail. But the question is how far down it's going to reverse. Maybe it might hit the wall and just reverse a little bit and then go through the wall, right? Or it might hit the wall and go all the way down. We have to try to figure that out. So my indicator now, it's a whole bunch of indicators in one. And what it does, it will mark many walls in different time frames. So again, this is not a lesson, but you have the daily time frame, the 4-hour time frame, the 30-minute, the 15-minute, 5-minute time frame. So you can trade in different time frames where each bar, in this case I'm on the 15-minute time frame, so each bar will take 15 minutes to be formed from start to finish. It takes 15 minutes. If I go to the 1-minute time frame, each of these bars will take 1 minute to be formed, right? This bar took this is a huge bar because it's big and it only took 1 minute to be formed from here to here. This took 1 minute to be formed from here to here, 1 minute from here to here, 1 minute. This is an hour time frame. It took an hour for this to be formed from here to here, from here to here, 1 hour. Now, I like to trade the 15 or the 5. It's sort of in between everything. And again, it's not a lesson, so it's a long story why. Now, so each time frame has a wall, just like this red bar here, or the wall may not be a red bar, it may be just a yellow line or something. It depends on how strong that wall is. So I decided now, what people do, they look at the 15-minute time frame and see where's the wall in the 15-minute time frame. Then they go to the 1 minute time frame. Where's the wall on the 1 minute time frame? It's still trying to load here. Yeah, so the wall for the 1 minute time frame is right here. And 30-minute time frame. Where's the wall for the 30-minute time frame? It's right here. So you got to be switching back and forth, back and forth. So what I did, I created an indicator that will have all the walls. Remember, a wall, it might hit the wall and then it might go back down, or it might hit the wall, go down a little bit, and then go back up through the wall. Think of it as you are running and you want to jump over a wall, but sometimes you didn't run fast enough, so you hit the wall in your face, so it pushes you back, but then it pushes you back a little bit, so now you said, okay, I got enough energy now to run and jump over the wall. So yeah, that's the analogy I'll use. So where was I? Right. So I decided to put all the walls on one time frame. So I can see now the 1 minute wall, the 5 minute wall, which we call support and resistance. If it's down here, it's support. I see I'm put here major reaction area support. And if it's above the price, major reaction area resistance. So I put all of them, 15, 5, the 60-minute time frame, which is 1 hour, it's right here. Okay. So I think I'm still in replay mode. Right, so I'm going to play. It's right here at the wall right here, and let's see what happens. I'm in the replay mode, so it's telling me what happened before. So it hit the wall, but it's going through the wall a little bit, and then it's coming back down. So yes, it can go through the wall a little bit, but then it comes back down like you're seeing here. Okay. when you see a whole bunch of walls together like this, like the 1 minute wall, the 5 minute wall, the 15 minute wall, all like bunched together so close, it can bounce between those walls constantly for a while before it gets enough energy now to break through either up or down. Okay. So it's going to bounce here for a little bit. Depending on the energy, so it's bouncing. So now the walls are broken and they're gone because the walls are broken. So now it comes down to this 15-minute wall. So now we're getting a little more about what price wants to do. On top of that, so this is where the AI really shines. It's this momentum box. Again, I made this myself with using AI reasoning. So momentum comes from the AI looking at the stock market, like the news and where things are, in real time to tell me what's the momentum, how many people are buying or how many people are trying to sell. That's this box right here, momentum value signal. Also on this side, it's the trend. Are we in a bearish trend? This is VWAP, it's volume. Are we in a bearish volume, meaning going down? That's why it's red. Or are we in a bullish volume going up? This part here is the trend. This is green. So in certain time frames, it might be going up. Other time frames might be going down. It's best to trade when everything is red or when everything is green, right? Not mandatory, but it's just best to do that. So yeah, so I'm using AI for that. This momentum telling me how many people are buying, that'll be a lot of people are trying to sell and less people are buying. That's the buying is the green. Weak bull, it's weak because a lot of people are trying to sell. Strong bear, people trying to sell. This chart here is also reflected by this, so you have a visual about more. It's tend to be going down in terms of volume and momentum, and these red dots here are reflective of this as well, so it's easier to see. Sometimes, so a lot of people will say, I don't like a lot of things on my chart, and you'll see it a lot on YouTube because it gets confusing. But this is how I do it. Some people won't agree. That's the way I do it. So, right. So, also, it says London high, previous US high, Asian high. So those are the highest points where the market reached in the London session, because there are different sessions when you trade. There's the American session, we call that the New York session. That's from like 9:30 in the morning. And then there's the London session. That's like 3 o'clock in the morning till about 8 o'clock, 8:30, somewhere around there. But over there, because of different time zone, it's the daytime for them. I don't trade those times because I want to sleep. The Asian time, that's another time. So price tends to go back to those areas. That's what I'm trying to say. For something called liquidity. So that's a whole lesson by itself. But it tends to go back there for a little bit and then move away from there afterwards. So if you look up here, these blue labels here, this is the US high from yesterday. So the price tend to go back to there, right? Even though it went through the wall, it stopped at where it reached yesterday, because it tends to do that. Then it comes down, and it will probably hit the London high, and it will go back up from here just a little bit. Let's see if I'm right. I can't remember, but it should. Right here, it should bounce up a little bit before it comes back down. Not to say it will bounce up and go right through, doesn't mean that. It depends on momentum, right? But it will bounce here a little bit. Let's see. All right, here we go. So it bounced, it went back up. Of course, like I said, a little bit, and the line, it tends to respect the line, but it doesn't mean it exactly respect the line, especially if there's another wall right under it. That's the 15-minute wall. It will break through here and also hit that other wall just below it, because it's so close, right? It's so close. After you do it for a few times, you get used to it. And like I said, it went up a little bit. All right. I didn't say it will go right through. I said up a little bit because the momentum is saying it's more red than green. So I knew it was just going to go up a little bit. Plus, a lot of things to look at. If I could zoom in on this. I put here entry, pullback zone, entry, pullback zone. So as it comes smaller and smaller like that, it's going to bounce around those zones more until it gets wider and wider and wider. So that's another indicator that I made, because I like to see everything on one chart so I have a better idea. That's how I trade. Some people will not agree with me. They'd like to see one line or just two lines. I don't trade like that. I need an overall picture. Maybe it's my dyslexia. I don't know. But yeah, so that's it. All right, so let's go. Again, that's another thing too. The overall trend is red. So I'm just looking to sell. The overall trend is red. You can buy when everything is red, but it will be short buys and it will be a little risky. But the overall trend, time frame, this is overall trend, view up trend. Volume, everything is red. Overall momentum is red, so I'll just sell. I might lose some buys here every now and then, but I don't need to take that risk. You don't chase the money when you trade, else you lose. So if I see that it's going to go up a little bit, like it went up here a little bit, I could have made like $50, $60 here. You could even make $100 from here to here. But I don't want to chase that. The overall trend is red. I'm going to keep trying to sell. Because I'm more sure. Again, trading is both. People say, is trading gambling? I say yes. Is trading gambling? I say no. Because it can be gambling if you take unnecessary risks that you really didn't need to. Like you're trying to chase the money, so I want to get every penny. When it goes up, I want to get that. When it goes down, I want to get that. When it goes up, I want to get that. I want to get that. I want to get that. That's like gambling, because you're trading against the trend, and that's like gambling. But if you trade with proper risk management, proper strategies, and you stick to your strategy, it's not gambling anymore. You know where the price is going to go. You have I would say 90%, 95% chance of knowing where it's going to go. All right? And it works for me. So that way it's not gambling. But if you're just taking chances, that's gambling. All right, so let's go. it's going to keep coming down. So the reds are getting stronger and stronger, but we still have this pullback area right here. There's a wall right here. This green support, S is for support. So it's going to bounce. It might push the wall a little bit before it goes up, but it will go up a little bit. See? What did I tell you? Right? What did I tell you? Reaction areas. So the name of my app, I'm going to turn it off. I have no clue what's going on. I'm turn back on. It's called VRAM. It's called Volume, Reaction, Areas, and Momentum. That's what I look for. Volume, I want to see what the volume is. I want to see what the reaction area is, RA. Reaction areas will be the walls. You get a reaction, whether up or down, you get a reaction. And momentum. Momentum and volume are almost the same, but one includes the other. No, why am I taking this off? All right. Let's go again. So we see here momentum is going green a little bit. That's because it hit a reaction area. It hit a wall and is going up. And the wall is getting stronger when more of the time frames are getting in there. So the 15-minute plus the 30 minutes, so that's a strong wall. So it tends to move up faster. But the overall volume is red. The overall volume is red. So it may not go all the way back up. It may come back down. I'm always going to use the word may because circumstances can change as to what happens. If for some reason war breaks out right this instant, all of a sudden something could react, but that's not always the norm. That's just one example. There are many reasons. All right. So it's coming back down. Volume is mostly red. Now the momentum is turning red again. Now, look at this. So it hit, no, we didn't do it yet. So it hit the reaction area again. It hit the wall again. Did it get enough liquidity? That's another lesson. To break through the wall. Sometimes it has to come up, get some energy, like kinetic energy, and then come, like, again, the analogy of trying to jump over a wall. You need to step back a little bit before you can run, and then jump over the wall. So let's see if it did that. We don't know. Sometimes it needs to hit the wall a few times before it will go through. Where's the button? Nope. So it hit the wall again. It needed some more energy. That's fine. A lot of energy here to go back. If it goes up, it's not going to pass this because there's a big wall right here. This red, this is a 50-minute wall, plus the London high is right here, plus the pullback zone is right here. So my indicator is doing that in real time, putting these walls in other time frames to tell me, oh, don't try to buy now because all these walls are popping up. So yeah. Come back down. So let's see. Got the energy. Okay, there we go. So it got some energy to break through the wall. That's a big deal that it's going to keep going down because it got some energy. That's just a little bit. Let's keep going. Let's keep going. There we go. There we go. Here we go. Right? All right. So energy. Got to build up that energy. And it did. It went right through. It built up so much energy. And it depends on the time of day. So, again, a lot of things to look at. there's another version of my indicator that will give you the time. So it depends on sessions. When the Asian session is about to end, there's a lot of energy there. That when the London session begins and ends, there's a lot of energy there. So this looks, what time is this? This breaking through around 3. So this was the beginning of the London session. So a lot of volume, a lot of energy, because the London traders just woke up and now they're beginning to trade. The big institutions are beginning to trade. So you get a lot of energy. So it was just kind of straggling along here to get some energy, going up and down to break through the wall, and it did, because the London investors woke up and it just broke through the wall. All right. It hit another wall here, 15-minute to 30-minute wall, so it's going back up. And then again, it broke through the wall because the overall trend is bearish, so it wants to come down. But sometimes it has to go, as I said many times, it has to go up before it comes back down. It has to get that energy before it comes back down. Where's the button? I keep losing the button. All right, so it's coming back down. It's usually a down day. I took 2 trades this morning and I made $250. 2 trades. It was around 7 o'clock, somewhere around there. Oh, it's 9:24 a.m. now. I gotta get out of this lesson because I gotta go back live because trades are about to happen. So I have. Let me wait for it to. Again, when you turn this off, you're a little bit lost. These lines here are pending trades. Now I put pending trades where I think the price is going to go eventually. So when it reaches here, it will automatically enter the trade and automatically get out. And if it does that the way I assume it would, I'll make $485. Now, why do I think it's going to go there? Because there's a wall right here. See where again, I'm going to turn it off. I put this here. I put this here. I'm going to tell you why. And I put this here. I'm going to tell you why. So it's here because there's a wall right here. The 60-minute wall, the 15-minute wall, that's a strong wall. Price tends to navigate, to gravitate to that wall like magnets. It's trying to push up to get this 50-minute wall right here. There are 2 50-minute walls. And the Asian low, you can hardly see that. It's right here, so it's trying to push to get that. I could enter a trade to go up there. I could. But that's buying, and the overall trend is red. So I tend to not. I've done it many. I did one today actually. That's trading against the trend because I know it's going to hit there before, but I don't always like to do it. All right. So it's gonna hit that or close to it before it comes down. Now we're approaching 9:30. That's when the New York market opens. It's now 9:27. Here's the other thing. I don't like to trade at exactly 9:30 when it just opens because the price tends to go wild, like really fast in this direction or really fast in that direction, like what you saw here with London. There's a way to do it, but sometimes you could be wrong. And depending on where your stop loss is, you can get stopped out. So I typically don't like to do it. So I might even close this out so it won't take the trade. because we're approaching 9:30. If I'm lucky, no, I don't use the word lucky because I'm not using luck, as they'll say. He's gambling. But if I'm right in my prediction, it will, in 2 minutes at 9:30, I'm looking at the time up here, it's going to hit that and come all the way down like really fast. So let's see. And I'm going to keep my button right here to cancel the order if I have to. Because it's looking for liquidity. What's liquidity? It's cash. So when you trade, you have to buy and you have to sell. You buy and you sell. But if I am trying to buy a bag of oranges, someone has to sell me those oranges. Hold on. Let me see what price wants to do here. It's coming down. There's a big gap here, so it might come down to fill that gap. So what I'm going to do is I'm going to hold on the lesson right now. It's coming down, it's coming down, it's coming down. I'm going to move this closer to here. And hold on to those oranges for a minute. Let me just watch this trade. Let me move my stop loss above the wall.
It's 9:30.
It's 9:30. Let's try it. It's going up to hit the wall. Let's see. It's going down. Let me move this up here a little bit. I'm in the trade. I'm in the trade. I'm positive 27. Let's see. You're looking at this number right here. Oh, no. Wait. I almost hit the button. Like I said, I don't like to trade on the 9 o'clock. I'm doing it now just to show you. I'm positive 17, negative, hold on. Coming down, and I'm going to stop right. Ugh. Oh no. I was positive 100 and something dollars, but I, come on. I should have gotten out of trade at 100, but I was too slow. It still has a little way to go to get to that wall, that 5-minute wall, and the 15-minute wall. I'm going to move this closer to here because I don't want, I'll make less money, but I don't want to gamble. Hold on. There are two walls I'm looking at, this wall and that wall. And I'm going to show you. This wall here is, so what you would do is, oh wait, hold on. I can't talk and trade at the same time. Come on. All right, right, so what I'm going to do is, I see the volume is coming in. I'm going to take it right here. All right, I came out. Now, I just made 100 and I could have gotten more, but I am not a greedy trader. Especially at 9 o'clock. Now I'm going to show you how much I made. It could have come down more, but it's 9 o'clock and people are going everywhere. $292, right? Right here. Total profit and loss, $292. I don't do that often. No, I mean, I don't trade at this time often at 9 o'clock. I don't like it. It brings anxiety. Yes, I could have gotten 600. I could have gotten more if it came all the way down. But that's taking a chance and edging into gambling because it's the opening and it looks like it's going to come down. Yes, so it's not exactly gambling, but you got all these walls here. 5-minute wall, 50-minute wall, 60-minute wall. So it's going to hit those, go back up a little bit, come back down to hit it, go back up a little bit, come back down. And I don't need that anxiety. I just want to make a little bit, come out of it, and then wait later in the day now to look for slower setups, not those that are going so fast. That's anxiety. And you got all these walls, right? So sometimes it'll just hit that wall and then come all the way down, and I usually wait. It's 9:34 now. I usually wait till 9:45, 10 o'clock. Then I began to trade. Then I begin to trade. I just did this one. I made $200 and something just to show you what happens and why. Yeah, 292. Why I decided to go. Why I decided to sell rather than to buy, because here was red. Here was red. It was close to this reaction area, close to these walls, or closer to these walls than these walls. Where's the other wall? Up here. This wall right here is closer to this. So, and everything is red, saying it's going to go down. Volume here very strong, strong bearish. Again, these are mine. You're not going to see these available anywhere else because I made them myself. And I haven't made them available yet. So, see here, I could have been making more money, but no. You don't chase the money. That's how you lose money. That I just made 293. I could have lost it again if I decide to come back into the trade, even though I have an idea of where it will go. I think it will come all the way down. I'll show you another trade that you can do. All right. Oh, red. This is where I was going. I can sell, I can put in an order here that would, let me show you, there's something called a sell stop. That's where, what's going on here? I'm going to put my stop loss here. I'm going to put my take profit, that's where I'm going to take my profit, right above this wall. Then I'm going to put my entry. It may not be worth it because it's so close. All right, right here, right below this wall. And now I'm going to get into the trade. Oh, I'm too late. I'm too late. Wait. Hold on. I'm trying to get in here. All right, so there we go. If you saw that, it just happened very fast. So I knew it was going to come down because there was, but I went below. I went between two walls, and I made an extra. So now I was at 290. I was at 292 or something like that. minus, well, 317 minus 292. So I just made an extra $25. That was just a short thing, right? And now look at, it hit the wall and it bounced right back. I kid you not, it happens all the time. Now, how far is it going to bounce back? It's going to bounce back to go all the way back up here? Probably not, because you still have a lot of selling going on, here. So do I come back in the trade? No, not yet. That's gambling, right? You see sure things like between two walls, and if the lower wall is a strong wall, support and resistance I'm talking about, it's just going to do it, right? You just know. So that's not gambling. But right now, it pushed back up, and I believe it's trying to get more energy to break through the wall, but I'm not going to take it yet. If I were to come into trade again, I will place my entry, I was now going to say it, right below here, this wall, and take my profit at this wall or at this wall. But I have to do it after the wall first, because I know it went over the wall before. So I could be in a trade right now and make some extra money. I'm not chasing the money. Okay? I'm not. Even if it works, the whole mindset of chasing money is not good for a trader at all. Even if it works, okay? I can open a trade right here. I just did it and I made $25. I'm trying to show you, but it's not good to teach you with real money. That was actually real money. It wasn't a paper trading. That was real money. So I can put another entry here. If it breaks that wall, I can take my profit right here, and I'll make some money. The $25 I made just now, it was going to be $100, but I took too long to enter, so it got less. And well, $25 is $25, but a trade, you can get in a trade for like $300, $500. Yesterday, I made a $700 trade, right? I made $317 for the day already. The day is not over yet, so you look for other trades to get in to make more money, right? If I were not talking so much and see all these lines here, that's where I got in the first time. I could have remained in the trade because I'm looking at it and looking at the volume, looking at this, and I'll be making a whole lot. I'll probably have made $1,000 to $1,500 already, right? But you got to be focused. You can't be talking too much, right? You got to be focused. All the red dots are here. They are telling me we're going to be selling for a while. See, we're selling. I could get back in. I can get back in from here to here. Should I do it? Nope. Wait, what was that? I was going to say it already went through the wall. It didn't go through yet. Should I do it? Previous low. I'm going to read what this wall says. It says the previous has two walls here. Support. So support and resistance. I'm the only one you will hear who will call those walls. Everyone will call it by their right names, support and resistance, right? But I want to give the analogy of a wall, because that's what it is. You're running into a wall. So I'm not going to take a trade if I know it's going to run into a wall and just hit my face on the wall. You don't do that, right? Because it's going to bounce back from the wall a little bit. Sometimes it's so strong that you jump over the wall all in one go, but that's when you have a lot of volume. Looks like it has a lot of volume here, but this 0% weak, I got to fix that. It shouldn't say 0% weak. It should say 100% or something like that. So, but I know what it means. I made it. I know what it means, so I'm using it. But I have to fix that so it'll show 100% in the red, meaning you can sell. See, I wasn't wrong. Could have entered between this wall and that wall. I would have made some money, right? So, but I'm like talking my head off. So I just lost some money, but that's okay. That's okay. You don't chase the money. There's always another trade to look for. Just let it happen. Let the trades come to you. Don't chase the trades. All right? So, another thing, again, another indicator that I made, I'm saying I made because I don't want you to go looking for them to get access to them. I haven't released them to the public yet. Now, this says futures top movers and stock index top movers. This is Tesla, Microsoft, Netflix, Nvidia. Everybody's talking about Nvidia right now on the NASDAQ. So mostly red, less green. So that coincides with my red here. I made all of these indicators, all these tables. It coincides with the red here. So it gives me an idea of what the day will be like. So today might be a down day. It can change, but for right now it's a down day because a lot of stocks are trading red. Oh my gosh, this is going crazy. I could have been in a bigger trade right now. But no. That's another thing. That's another thing. Be careful. So it gave this long, and this lesson's going way too long, but it gave a long sell, a long candle. I'm on the 15-minute candle. So there's a big gap between this candle and that candle. And wait, this candle out here and this candle inside on the left. There's a big gap right here. Price usually tries to bounce off of these to refill that gap before it goes further, or usually before it comes back down. So, oh wow, it's just moving. I could have made, yeah, definitely, I could have made $2,000. But you don't chase the money. So I won't. So it's actually pushing the walls further and further with so much volume at 9:46. Difficult time to trade. You don't know what the traders want to do, but they're really moving. You wait. You don't cry over the amount you lost because you got to live for another day. I just made 300. I don't want to lose that 300 trying to chase 1,000, right? Because it's supposed to. It's just like real life. If you have a road barrier and your car hits that barrier with a little bit of force, it's gonna bounce. The car is gonna bounce back. But if the car is coming so fast that it hits it could move the barrier forward. So that's what's happening right now. It's pushing so much volume, a lot of volume in the market because it's the open. It's pushing the walls further and further. And that's where it becomes uncertain to me how far it's going to push that wall. So I tend to stay out of it until it's like 10 o'clock or whatever, when I know the volume is going to be less and it's just enough to bounce off the walls. Because it usually just bounce off the walls. But when it's so much that it will push the walls, I tend to stay out of it. Right? Okay, now look at what we have here. We have another. So this deep red is a major wall. Let me scroll here. Not a major wall, a mega wall. So I label this, again, I made these, everything you see I made. I named this a major wall because it's price tend to bounce back from those particular walls a lot. And I label this a mega wall, a mega reaction area. Resistance, mega. Not to be confused with MAGA, but that's a little story. So down here is a mega reaction area. So it's huge. What price tends to do at times is to come all the way down to this reaction area. So it's trying to push the wall closer and closer and closer to get to this major area. Now, it may not get there in one go. It may take some going back up a little bit. I don't see any walls right here. So I don't want to, don't assume, because it's so large, don't assume that if you put an entry here, it's guaranteed it's going to come down to this major area. There may be new walls that are built in between because it's so large, right? So I don't want to assume that. There are times when it will just go right through, but I don't assume that. It could have a wall there eventually. And I know there's a big gap right here. In 10 minutes, there's going to be another gap right here, and it tends to come to refill that gap. Plus, to fill this whole big area, to come all the way down here, it may need to go right back up to get enough momentum, enough kinetic energy to run through and jump over and come all the way down here. So I tend to stay out of it, not gambling. I tend to stay out of it. Yes, I'll lose out in some money, but again, I'm kind of talking my head off, so I'm not totally focusing, but it looks like it wants to do that. When the institutions, the big banks and the hedge funds and all that, they are the ones doing this right now. Sell, 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 sell. And then when regular people like me see that, oh, sell, everybody is selling. Let me jump in. And when I jump in now, oh, here we go, price is going back up. See? Then I jump in and now I lose money, right? So I don't do that. Never try to catch a moving train. If it's coming down like at a fast rate, don't try to catch that train. A slow rate, in fact, I didn't want to catch that. I tend to wait for it to come back up there. But if it's a slow train, I may or may not. I might. But a fast train, don't try to catch a fast train in any direction. So now it's going back up. It hit this wall, and it's going back up. Right? So I would have lost if I tried to jump in right here, because on the wall, I never do that. I jump in after the wall. Or I might take a buy trade at the wall because I know it's going back up a little bit. I could do that. But so early in the morning, with so much volume, sometimes you don't know, so I tend to wait. All right, that's enough for one day, and I will stop this. Let's see here. One more thing. So this particular account has $2,400 in it. When I took that trade, you can trade a certain amount of contracts, right? You can trade one contract, you can trade 5, 10, 11, 12, 200, whatever. But depending on how much money you have in that particular account, I have more than one account, it's risky to trade too many contracts in a small account. So with $2,000, I would trade between 5 and 10 if I know exactly where it's going to go. Now, I'm going to show you the difference. This is the last thing I'm going to show you. I'm going to open a trade that I'm not going to take yet. I'm just going to show you with let's say with 2 contracts. So it's just an example. Let's suppose I were to open a trade here below the wall, and I put my stop loss here just before the other wall. I would make 300. This is a big gap. I'm not taking the trade. I'm just showing you. I have 2 contracts, and if I would take that trade, I'll make $300. Now, if I were to change that to 5 contracts, now I make $700 with just 1 trade. If I change it, if I'm right too, you know, if I trade 10 contracts and I'm right, I'll make $1,500. So I'm showing you, you can make a lot of money, right? But the risk is, if I'm wrong, I could lose $1,500. Not exactly. I can lose, depending on where my stop loss is, I can lose 400. I wouldn't put it so close. I can lose 500. I can lose 1,000. Depending on where this is, I could lose accordingly, right? If I do 100 contracts, which I will never do on this account because it's so small, I'll make $12,000. Now, can you make $12,000 in 1 trade? Yes, if your account size is large. So this account size is $2,474. If this account size was like $50,000, let's just say, or the account size was $100,000, yeah, I'll do 100 contracts because I have enough of room in my account to go either way. If I lose $8,000 in a $50,000 account, I'm not going to cry over that so much. Then, yeah, or if I have a $100,000 account and I lose $10,000, not a big deal because I can make it back in the other trade. Like if I was wrong. So it depends on the account size. So with an account size of 2005, I'll probably do 10 contracts and I'll make like 1,000 here. Or if I want to be conservative, I want to be near the wall because when the price is nearing the wall, like close to the wall, it's almost guaranteed it's gonna hit the wall. So in this case, 10 contracts will give me $400 or $500 in 1 trade, right? And I can move my stop loss closer so I won't lose as much. So that's how you do it. I just took 2 trades and you saw I made some money. So it's real. Let me cancel this. I'm not getting into a trade right now. Let me cancel that just to be safe in case my mouse tends to hit that. So, okay, last thing. In closing, like those pastors always do, in closing, and they talk for another 30 minutes. When I see a lot of selling went on, I think I mentioned it before, there's something called exhaustion, and the market could be exhausted for this particular time period. It has to recover. It has to go back up a little bit to recover. So this might be exhausted. I won't assume that it will come all the way back, all the way down right now. It might go back up, and by around 1 o'clock Eastern time today, it may come all the way back down. I don't assume that it'll do it right now. It looks like it would. I'm seeing a lot of volume coming in. Now I'm beginning to think. But again, it's pushing. It's not going over the wall. It's pushing the wall. So do I want to do that? I don't know. I don't know. I don't know. And that's where fear comes in because even though my indicators are telling me go for it, I don't always 100% trust it. I do, but I don't, because there are other factors that my indicators are not telling me. If it has been exhausted and it just needs to go back up to get more energy to come back down. Now I can take a chance and put an extra trade right here because I knew it's so close to this big reaction area, it might just go through. But yeah. All right. I know I was telling you something and I stopped because I began to trip. I can't remember what it was. Liquidity. Liquidity. I was talking about oranges. So in the market, for me to make that $300 you just saw, and I was selling, selling, selling. On the other end, someone was buying, 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 and lost it. So I just took someone else's money, and that's how trading works. If that bothers you, well, don't trade. But the person can always make a good trade and live to tell another day. But when I sell, another person is buying. And that other person is doing the wrong thing at that time because he just lost $300 and I just gained $300. So for me to buy oranges, someone has to sell me those oranges. For someone to buy those oranges, I have to sell my oranges. Okay? And that's how it works. You just have to make sure you're in the right direction. So I decided to sell, and the other person decided to buy, so they lost money. I got their money. Right? Now, I don't want to lose the money I just got.
It's 10 o'clock.
So I tend to be a little cautious. Right? So, yeah. So that's what, so liquidity means just that. So banks tend to go after novices and retail traders like us. We have $2,000 and $10,000. We are called retail traders. So they know this is an area where a lot of retail traders are, or down here. So they may come down here to take our money and then go right back up. Take all our oranges, right? So I tend to trade with the banks and do what the banks are doing. So I don't do the opposite. So see, right now it's going back up. So it didn't come all the way down. It's going up kind of strong. I think it's going to reach all the way up here. It may not get here because there's this big wall right here. There's a small wall right here. So it might, see, it hit right at that, what did I tell you? It hit right at that wall and went back down. But it may have enough energy to go back to this wall. See, it's going, no, I'm looking at the wrong thing. Yeah, so may hit this wall. But I will just wait. It's trying to get energy to come down to here most likely. So I'll just wait. All right, so I just got back in the video because I wanted to show this to you. So it did come down to the mega reaction area after I stopped the video, and I'm coming back in now. But I just wanted to show you one more thing. Something I forgot to mention. So if I were not talking so much and I was really focusing on all that, and I would have remained in the trade, what could have happened was, if you got in the trade here and you realize there's a lot of volume and it's going to just keep going, it might pull back a little bit and keep going, pull back a little bit, keep going. What you do is you put your take profit at the mega reaction area, but as the trade is going more and more in your favor, you just move your stop loss, called a trailing stop, to lock in gains at different points. I would lock in a gain here, I'll lock in some gains here, lock in some here, and probably take out. But because sometimes you just never know exactly what I'm afraid of in the morning trade is those spikes. So On a regular trade, when I'm taking a slow trade, I could leave it. I can enter a trade, let's say here at the bottom here, to enter a buy trade, and on a slow trade it'll keep going up, and I'll just move my stop loss to lock in. So if I were to walk away and the price goes back down, it will lock in $100 or $200 or whatever. I wouldn't lose any money. So if it keeps going, but what I'm afraid of when it's 9:30 in the morning and all these big moves, sometimes the price would spike up like less than a second, like a split second, like half of a second. It will spike up and then go back to where it was before. That's called a liquidity grab, right? So that's why I tend to jump out. You're going to lose some money. Well, lose out in some money, not lose money, but you're going to lose out in extra gains. But when it's early in the morning like that, I prefer that because there's some spikes that will just take you out. So yeah, but you can move your stop loss. You get in here, you move. Let me show you what that looks like. Let's say I'm not going to take the trade. I'm just showing you. Let's see. All right, let's suppose I got in here. I'm not going to take the trade. All right, so let me move this so you can see it. So I got in here, and my stop loss is up here, but down here is like $4,000. I can make $4,000. Yeah, which yeah you can, but if I am in a positive trade, so I got in here. Let's suppose I'm in a positive trade. I'll move my stop loss. Right now it says, see with my mouse, it says negative $1,000. If I were to move to here, it'll say positive $340 because I moved it because price is going down in my favor. And as it goes down, I keep moving it as it goes down. I move this, so that's $1,000 I locked in. I could walk away, and if it goes back in the other direction, I'll make $1,000. Then it comes down. Now it's positive $1,700, and I keep moving it down here. So that's called a trailing stop. So you're trailing the stop loss. A stop loss is exactly what it says. It will stop the losses. So in case it goes reverse against you, you can only lose, like let's say here, you only lose $500 instead of losing out like if you had no stop loss and you lose $2,000, right? It will limit your losses. But if price is so far into your trade that is going in your favor, you can move it in a positive so you don't lose anything. You gain $700 or you gain $1,300 or whatever it is, and you gain $3,000 or whatever. So that's what I would typically do if I'm like really focusing and I'm on a slow trade that's moving in my direction. All right, so that's it. I'm signing off for good now. All right, I'll catch you on the next one.